Awesome. Thank you so much, Ron, and thank you for everyone to attending, and thank you, Ron, for the invitation. Really, as Ron said, this is a huge space, a lot of hype, a lot of interest, and a lot of genuinely real pieces of activity that's happened, particularly over the last 6 to 12 months. We've seen nation states like El Salvador, as Ron said, adopt the technology as legal tender. Super excited. I'll be going there next week for my first trip for the Bitcoin National Bitcoin Week, and really, a lot going on across the space. A lot of it, some of it a bit more out there in the sort of metaverse. I'm sure you've all seen the headlines from Facebook and Microsoft and others, down to real practical applications that people are actually doing today and have been doing for multiple years. So today, just wanted to talk a little bit about adoption, how it's becoming real, how people are actually using it, what they're using it for, and then sort of overlay some of the trends that we're seeing in terms of where the market is going, various different initiatives. And to do that for today, really wanted to sort of ground that in some reality and ground that in some data with a recent survey that we commissioned of about 2,000 US citizens across a wide spectrum of demographics of gender and age and wealth and knowledge. So really just sort of run through that today as that sort of starting point and grounding that we can then use to talk about some of the trends, adoption and initiatives that we've been seeing. Super quick personal introduction. So I got in Dan O'Prey, the EVP of digital assets at Bakkt, and really, whilst digital assets at Bakkt means a sort of broad spectrum of things, my particular role is very much focused on leading crypto within that and working with my counterparts in loyalty and payments. Ron mentioned earlier, Bakkt isn't just a pure crypto company. We're really looking at that sort of holistic digitization of assets and how we can help consumers, businesses, and institutions unlock the value that they have, whether that be holding Bitcoin or using it for payments or air mile points or rewards or airline miles, through to actually traditional fiat payments and money movement. So really, Bakkt is kind of unique in that sort of intersection between crypto, loyalty, and payments, and how they each play into each other in different sections. I've been in this space for a little while now, about 8 years. First got into Bitcoin in 2013. From there, I was one of the co-founders of a company called Hyperledger, which was one of the first of what's now sort of known as enterprise blockchains, really sort of exploring the non-cryptocurrency side, how we can take that technology and apply it to real-world asset classes that already exist, and the efficiencies and scale we can get through those. That was acquired by a company called Digital Asset, confusingly, based in New York, where I was a chief strategy officer for about 6 years. We helped create we created the DAML smart contract language, which is being used by multiple different financial institutions, market infrastructures, healthcare providers, most notably the Australian Securities Exchange, where every single stock will be digitized and processed through smart contracts and blockchains in the coming years. And then lastly, joined Bakkt about four months ago. So still relatively new to the company, being quite a wild ride, as Ron mentioned. Span out of Intercontinental Exchange, who own New York Stock Exchange, and went public a couple of weeks ago. So just had our first board meeting yesterday, and earnings call coming up on Friday, and very, very exciting time to be at Bakkt. I'll talk about some of the announcements that we've recently made as well. So hopefully that gives you a quick spectrum of I've looked at this technology, crypto, blockchain, digital assets from multiple different angles, familiar with the challenges of institutional adoption in particular, integration and actually bringing that to life and proving the business cases on both the business side and technology. But yeah, today we're going to focus a little bit more on the specifics of crypto and sort of talk to how that fits in with some of the areas of what Bakkt's working on. So as I mentioned, just sort of running through the survey that we did recently, quite informative, quite surprising in some cases, and quite sort of, oops, I've gone back to myself. There we go. Wide variety of things that maybe to some are quite obvious, and some pieces that are quite surprising. So, first of all, we asked, how familiar are you with blockchain and cryptocurrencies generally? Pretty simple, spectrum of questions. Bitcoin's been around for 13 years now. Just had the anniversary of the white paper a week or so ago. For all the headlines, for all the talk, for all the excitement, for all the real world adoption, still the market, particularly in the US, doesn't feel like they're super knowledgeable about the technology. So still very much early days, even though we're 13 years into adoption, into understanding, and really into thinking about what people actually do with this technology and where they go next. So again, also potentially unsurprising. Oh, let me just see if I can get rid of this sidebar. There we go. Is by age group. So as you may suspect, younger generations, 18 to 29, 30 to 44, really felt a lot more familiar, or at least a lot less unfamiliar with the technology. And those sort of 45 to 60 and over, really feeling like they don't understand the technology well. And that's completely understandable. It is fairly complicated. Bitcoin alone is fairly complicated. But 8 years ago, I felt like I could, just about keep a grasp on what is going on across the space. But now, we've got, as Ron mentioned, there's not just Bitcoin and Ether and cryptocurrencies themselves, and utility tokens and NFTs and DAOs and Web3 and metaverses. Each of those are huge subjects in and of themselves. So generally, the market is feeling, pretty overwhelmed by the amount that they have to understand before they feel sort of comfortable dipping their toes into this space. So, but however, despite the general feeling of there's not, enough knowledge yet, confidence is extremely high. So over 30% of respondents were either, very or somewhat confident, and about 34% neutral. So only 30% there, having somewhat of negative sentiment towards how confident they are for the future of crypto. This was, fairly surprising to me. I think if we'd done this survey a year ago, it would have skewed a lot more negative. But very encouraging that, even though the levels of understanding on, where they could be, and there's a lot more education needed, there's enough real meat and real activity here that people feel that despite that, they have confidence in the future of the tech. So how confident and trusting, again, across different age groups, again, not surprising here that it skews more confidence towards younger generations, millennials, early millennials, Gen X, really, having grown up in the internet age and iPad age, knowing that, digitally native, the internet should have a digital native currency. It is a missing part of the spec that was originally proposed. So a lot of people in the younger years feel a lot more confident than the older demographics. So getting into a bit more about what people are actually doing rather than just what they think. So in the last 6 months, this was pretty surprising to me that of the people surveyed, 48% said they've already invested, already owned some cryptocurrency, which is half of the US population surveyed already today owning. Obviously, another 52% to go. But you can see here, generally skews towards lower amounts, people dipping their toes in with $100 or less. Certainly sort of under $500 is the largest percentage of people responding. And this is great that people have felt comfortable and sort of gone out of their way in some capacity to actually acquire cryptocurrency, felt comfortable enough to do that, trusting enough for the infrastructure that's already there. Bakkt, we know there's a long way to go, and we're not really sort of focused on those who are crypto diehards or already bought in or been orange pilled. but really looking at what does it mean for the next sort of 100 million people to adopt the technology, and that's not necessarily going to be those people who are going out of their way to a crypto exchange or to a third party, or signing up and learning themselves and being bombarded with 200 different coins, many of which have silly names and pictures of dogs on them, and really being left to their own devices in terms of where should I invest my time, let alone my money, and learning what to invest in. So great that people have taken the first step, dabbled in the area. Still a long way to go, a lot more adoption, and that's really where we're focused on. How can we make it convenient? How can we make it trusted, regulated, and allow consumers to acquire crypto through, without changing their behavior necessarily, whether that's earning rewards on the back of payments in Bitcoin, as a sort of passive way that you're already spending the money as you do today to get your feet wet and start to learn about the technology without having to dive head in up front. So again, lastly, sort of on age, most of those surveys are below 44. Again, not entirely surprising. Encouraging to me here that 27% are in that 45 to 60 demographic of those that purchased crypto in the last 6 months. So it is starting to even out, and I think over the course of the next year, we will see this become even more even portion between these different age groups. So how much have you invested? Really, again, 100%, $100 or less is by far the most prominent, and as you may expect, those with higher purchasing power in their 30s to 44, they're having invested more than $1,000, and even those who had, of that small percentage over 60, who had already purchased, skewing slightly larger amounts there. So I think this is where it starts to get more interesting. So of those who already own crypto, we asked them, what do you intend to do with it? How do you see it? And 58% of those really saw it as a long-term investment. And then 43, you can see here, these aren't mutually exclusive, so you can answer multiple. But 43 and 58 really saw crypto as an investment asset. And that's pretty common and pretty much, the primary use case in the United States, at least, where people are looking at this really as a kind of digital gold or store of value where they can invest and, number will go up over the long term, or they can flip it for a short-term profit if they get lucky. I think, we haven't surveyed people outside the US with these same questions, but to me, it's super interesting to see the sort of the difference in some of the data across the world, where in developed countries with stable currencies like the United States, most people are purely looking at it as an investment. Payment systems work, they could be improved, they're not super efficient, or maybe as cheap as they could or should be. But by and large, currency applications of the technology in the United States, haven't yet really sort of taken off. But that is somewhere that we at bakkt are placing a bet that trend is changing. So encouraging stats here in that 12 and 24% actually were purchasing crypto in order to use it for its original purpose as peer-to-peer electronic cash, and actually make purchases either in person or online. So even 12 and 24 relatively low compared to the investment amount. People are starting to want to actually use it to transact. There have been companies like Coinbase and Strike who allow you to actually get your paycheck in crypto these days. So you can set your direct deposit, it'll arrive with them, and they'll automatically convert it into Bitcoin so that you can actually straight get exposure to it, hold and store and be exposed to the value of the fluctuations, whilst being able to conveniently actually purchase and spend from those. And even recently, quite a surprising and amusing trend is that for US politicians, including the newly elected governor of New York mayor of New York, sorry, has said that he's going to take his first 3 paychecks in Bitcoin. And so we've seen that in Miami and Fort Lauderdale and in the Midwest, that even US politicians now are wanting to get paid in crypto alongside some famous athletes who have been doing that for quite some time now. And then at the top here is also sort of transfer cryptocurrency to someone else. So peer-to-peer it very much in the way that you would use US dollars today in Venmo. I'm looking to send money to my friend conveniently, or maybe make a payment to my gardener or cleaner. And what we're also seeing here is using this sort of peer-to-peer method as a way to actually do payouts and disbursements, particularly in the sort of gig economy, where people are doing odd jobs, or maybe are on lower incomes and don't want to, or would rather not have to wait 2 weeks before their paycheck clears, and actually with crypto can be paid on a daily or even potentially sort of hourly basis. So that ability to sort of speed up payments and get money into people's hands a lot faster is another use case that's getting quite a lot of interest and traction at the moment. Let's get that one. So that's of the people who had purchased in the last 6 months. So we sort of excluded them and asked the rest. Of the people who haven't purchased it, how interested are you in acquiring cryptocurrency over the next 6 months? And on the whole, if you add together very and somewhat interested here, 32%. So a third of those who haven't even bought it are net interested in acquiring crypto in the future, with 21% neutral, and only a quarter of those who hadn't already bought crypto not interested in buying crypto in the next 6 months. So, whether they bought crypto or not, I think, things are changing pretty quickly. Interest is very, very high amongst the sort of mainstream population, and people are looking for services that can assist with these and provide them the ability to acquire and use crypto.
Hey, Dan?
Yep.
One question that he could have been your former colleague at Stewart, who's now at Wells Fargo, but he used to be at the stock exchange. He was wondering, and I knew this from my own Coinbase account, how much of the, do you think that widespread ownership of digital assets, Bitcoin, was triggered when you set up your own Coinbase account? They give you like 1% of a Bitcoin value. Do you have any insights into that?
I don't have hard data on that. I would make the assumption that if you're going, cryptocurrency exchanges in the US are highly regulated and subject to quite stringent KYC. So I would assume that if you are interested enough to seek out a cryptocurrency exchange and sign up and go through that process and onboarding, then you're also you're doing that for a purpose, and likely not just to get that sort of small initial reward. So I think we've seen the earnings reports of some of the public cryptocurrencies, the averages across users are actually reasonably high in terms of the amounts that they're purchasing.
Okay. All right. Hopefully, Stuart, that answers your question.
Thank you. And yeah, Ron, I can't see the chat, so please do interject any further questions. Thank you. So what's bringing people to this space? So we talked about in the US at least it being an investment opportunity, being still the sort of primary driver. People sometimes dismiss crypto as people are just speculating, or they're just looking at it as an investment, and that's the only interest in it. And personally, that kind of bugs me a little bit, because I think if you look at, imagine comparing it to a company where you're an angel investor or a seed or a Series A investor in a company. You're speculating on the future of that company, but you're speculating on it achieving something, on it actually driving future revenue and having utility. And I think a lot of the people that are really sort of speculating on that long-term investment, particularly from the institutional or venture capital side, are making a strong bet that while we're not seeing that utility in the US today, we will do down the line. And we're already starting to see that utility in El Salvador, as we mentioned, where more users have the Kivo wallet, which is the Lightning payment application to use Bitcoin in El Salvador than have bank accounts in that country. In Nigeria, despite it being banned and not being easy to acquire, nearly 50% of the population have used crypto to make that payment. So I do think this investment piece, particularly in the early days, and 13 years in is still early days, it is going to be the primary driver, but it's speculation on some usage and utility down the line that we're really starting to see materialize at the moment. So another interesting one, particularly for a company like bakkt, is really, what are people seeing as the challenges about buying crypto? As you can see here, the large one is too much volatility. I think that sort of corresponds also to the at least the short-term investment opportunity. If it weren't volatile, you couldn't make a lot of money pretty quickly if you get lucky or place the right bet. Not so much we or anyone can do about the volatility today. As the market cap grows and as more people invest, and the size of the float and the volumes compared to the market cap decreases, I think we'll start to see that volatility dampen over time. But as Ron said, not here to make projections or predictions on exactly when that will be. Three other interesting things here really is I don't know where to start. So I'm sure you've all heard about Dogecoin and Shiba Inu and all these semi-random meme coins, that some of which started as jokes, so then people like Elon Musk tried to make them serious. It can be incredibly confusing, and there's a lot of different approaches and consensus algorithms and different teams and how their use cases and what they're looking to tackle. So really, knowing where to start and narrowing down that field of here are the one or two cryptocurrencies that you should start looking at and get your feet wet with before you start to explore the others. That education piece again of helping people get comfortable rather than here's the entire universe of crypto, knock yourself out. 18% said they don't trust third-party exchanges or brokers, which was very interesting to me. I think obviously crypto still has a bit of a reputation for being in the Wild West. Last 6 months we've seen a lot of institutional adoption and major multinational corporations get into the space. So I think that reputation is starting to be put behind us a little bit. But still here, I think the key point, especially for a company like bakkt, is as I mentioned, we're not trying to be that direct-to-consumer retail spot exchange where you come and trade crypto directly with us. We are looking to do payments, trading, peer-to-peer, and rewards, but we're doing that as a platform. So we actually sit behind our partners. We work with entities that already have those users, maybe they're banks or brokers, institutions or applications that are already well trusted, already have that user base. Users are already using them for other services, and we help those partners integrate the ability to pay with crypto or get crypto rewards or buy and sell crypto into those entities that are already well trusted. So a couple of recent announcements that we made on these is firstly with MasterCard announced that they're chosen bakkt to work with to enable the ability to pay with crypto anywhere across the MasterCard network, get rewards in crypto, as well as buy, sell crypto. So we are their sort of trusted platform behind the scenes where we take care of the custody of the private keys and securing that in a 80,000 pound bank grade vault with 24/7 armed security, and credible security around the billions of dollars that we keep in those facilities. The same type of security that the New York Stock Exchange uses. And really, we enable anyone who's issuing cards or has issued cards on the MasterCard network to plug in these additional crypto services. So again, you don't have to go and sign up to a third party or a smaller crypto startup that may or may not be around in a few years, that may or may not run off with your money, as we've seen in the past. But you can work with large institutions, large entities, trusted, that you already have that long-term relationship with. Second partnership that we announced there is, a couple, both with Fiserv and Finastra, and that's the ability to buy and sell crypto into their core banking platforms, so that any community banks or regional banks and those networks we integrate with Fiserv once and Finastra once, and they can roll that out to their community banks so that they can easily offer the ability to buy and sell crypto within their applications alongside other investment or checking banking solutions that they offer. And then I think I'll touch on this a little bit more later, that one that still continues to surprise me is this sort of notion that the price is too high, which is, understandable. People get sort of sticker shock. I think today we hit another all-time high of briefly hit $69,000 for Bitcoin. And that's kind of a sort of bit of a psychological unit bias in that there are only 21 million Bitcoin, and the price of one Bitcoin is denominated in a higher amount because the supply is a lot less than some other coins, whereas you have the more meme coins like Shiba Inu, who have a lot larger amount of circulating supply, and you can buy them for 0.000 X cents. So you feel like you can actually purchase a lot more of these, even though at the end of the day it's really the market cap that matters, and that entire market cap is still growing. So on this, related to that point is still surprisingly to me, 39% of respondents didn't know you could buy a portion of a cryptocurrency. So Bitcoin, as I said, sort of $67,000 today. Not many people are looking to say, okay, I'm looking to purchase one coin, let me put $67,000 into one. But they don't, a lot of people still don't realize that Bitcoin's divisible to 100 million Satoshis per Bitcoin. So 8 decimal places you can buy down to. So you can buy, $5 worth of Bitcoin or even less. So again, sort of shows that we're still in the early stages of the industry and understanding, and people are starting to get a little bit more comfortable. Companies like Robinhood have introduced the notion of sort of fractional shares. Cryptocurrencies have this from day one, so it doesn't obviously, it matters what the price is, but you don't need to buy a whole coin. You can purchase any subdivision of that you like. And then, what are people, what's most important to them when they're actually, they've read about it, they've understood, they made the decision that they're actually looking to purchase cryptocurrencies. What are they looking for? And here really, convenience and low cost are the two big ones. Of course, getting to, as I mentioned, sort of the next 100 million users once you don't have to wire your money to some exchange in Japan and figure out how to get your coins off it and do cold storage and actually be fully in the weeds of crypto. Now today, convenience is very high. Fees are still relatively high, across the board in the space. But another trend that we've seen over the last 6 months is there's a lot of competition around cost and fees for the trading of crypto, and those fees are being significantly compressed. So it's becoming even more affordable to purchase crypto. And then third here, which surprised me a little bit, is being a regulated entity. And Ron mentioned we've come out of the Intercontinental Exchange, sister companies with the New York Stock Exchange. We're a qualified custodian. We have money transmitter licenses in 49 states, excluding Hawaii. We have a BIT license from the New York Department of Financial Services, a trust license. So really within the crypto world, you don't get much more sort of regulated, compliant, and secure than bakkt. And that really we do see as a core differentiator, particularly when we're dealing with sorts of large financial institutions and payments networks and platforms, that we are trusted, we're secure, we're regulated. And it's great, it's great to see that consumers, view that as a core differentiator as well. Less so here is sort of, variety of coins. This was a little bit surprising to me. We often hear about those sort of long tail of smaller coins that get a huge amount of volume one month and then drop off the next. And well, there's certainly interest in those. It's not really the mainstream core, market within the US that's looking for those. Those are more the high risk, high return potential traders who are looking to have that wide variety of different cryptocurrencies. Most consumers today, Bitcoin and Ether, which bakkt supports both, make up over 50% of the market cap and about 55% of the trading volumes in total just between those two coins. And there's over 10,000 different coins on the market today.